Hello and welcome to CMB Regional Centers webinar today. I am Garrett Connors, the Executive Director of Investor Relations here at CMB Regional Centers, and I'm also accompanied by Mr. Matt Hogan, who's the Vice President of Project Development here at CMB Regional Centers. I'm going to give it a few minutes to let participants join. It looks like the number's growing, so if you don't mind, I'm just going to give it a little bit of time to make sure everybody can sign in. All right, well, I think I'm going to kick it off. If any more come in, I'm going to start out a little bit about CMB and EB-5. The purpose of today's webinar, of course, as you can see, welcome to CMB Regional Centers Group 75 webinar. The Group 75 partnership is the one that we're actively promoting right now in the market. But to start off, thank you all for taking time out of your day to join us with or join us in this webinar that CMB would like to host. Really, the purpose of this webinar is to provide real-time information about the Group 75 partnership for anyone that could be or might be interested in it, or might have clients that are interested in moving forward with an EB5 investment opportunity. So, once again, I hope everyone is staying safe during these unprecedented times. 2020 has been a crazy year. And that's the purpose of, I guess, us hosting multiple webinars a month to really get in front of people around the world due to the unfortunate circumstances of not being able to travel. CMB over the years has traveled to, I think, 30 to 40 some different countries to meet with clients face to face and be able to interact with them and give them that sense of security when it comes to moving forward with CMB Regional Centers. So we will continue to host webinars. For anyone that joined today, please continue to look at our monthly newsletter or for our email distributions that we send out for different webinar options that you can attend. So to start off, CMB Regional Centers. CMB Regional Centers was originally established back in 1997 by Pat Hogan, our CEO and founder. He has really been in EB5 longer than that, with some previous investments that he did with some of his previous businesses. But in 1997 is when we first established CMB Export, which is our California Regional Center, which is still in existence today. And since 1990, so with our over 23 years of experience, sorry about that, with our over 23 years of experience, we have now grown to over 20 regional center designations and Washington, D.C. As you can see from this slide, just this last year, we actually expanded our presence in the United States with opening up a second office in Dallas, Texas. So even during this pandemic, global pandemic, with the unfortunate, closing of certain businesses, CMB continues to grow to be able to service our clients and have a wider presence in the United States. As I said, established originally in 1997, we currently, and since in our 23 years of experience, we've been able to assist over 5,700 clients with their immigration pursuits. Of those 5,700 clients, CMB Regional Centers has already been able to assist over 4,900 clients to receive an I-924 approval. And then over 3,000 clients have already received their visa. 1,500 clients have already made it to 829 approvals, which is really the end goal for any investor, because that's the point where it's the removal of conditions on their visa that they would have received, and they get to live permanently in the United States. And then also of the 5,700 investors we have, over 1,800 now have received a return of capital. Through the 74 plus partnerships that have been fully subscribed at CMB Regional Centers, we have created a projected over 185,000 jobs. That is through indirect, induced, and direct job creation. And of course, that number continues to grow on a yearly basis as we continue to introduce new partnerships into the market. At this point, CMB Regional Centers has a 100% project approval rate at I-924, I-526, and 829 approval. As you can see from the picture on this screen, this is our management team here at CMB Regional Centers. Pat Hogan, accompanied by his daughter in the middle, Miss Noreen Hogan, who is the president of CMB Regional Centers, are the leaders of this company. Noreen took over as president roughly 2 to 3 years ago and is overseeing the day-to-day operations of CMB Regional Centers today. Pat is still involved, of course, and we look to him for leadership as well as Noreen on a day-to-day basis. Behind them, you will see our vice president team or senior management team. It is, of course, vice president's in-house general counsel, Mr. Neil Lee, who's our also vice president of finance. CMB Regional Centers, as you can see, we through the large number of regional center designations that we have across the United States, you can see that we're well experienced in EB5, but also putting together, doing our due diligence and structuring investment opportunities for our LPs. As you can see, CMB Export was our first regional center, and you can see that a lot of our projects are located in California. But you can also see that we haven't only structured one type of investment opportunity. From the different color coding on this map of the United States, you will see we have raised investments at the old investment thresholds for targeted employment areas. At the $500,000 amount, we've also raised at the new $900,000 amount. But even previous, we had raised under the old regulations of the program, when it was $500,000 and $1 million, we had also raised at the $1 million level. It just shows that although projects are usually sought after in targeted employment areas, so you can invest at the lower investment threshold, we have put together projects that have provided safety and security for our investors, that they were willing to go in at the higher dollar amount, knowing that they were had a high likelihood of getting return of capital and making it through the whole immigration process. We also did rural areas, which is defined by the USCIS to go in at the lower threshold. It can be in a targeted employment area, which would be a high unemployment area, or you could go into a rural area. And we have done a few rural projects as well. To speak a little bit about CMB Regional Centers, you just met our senior management team a couple slides back, but we do have presence throughout the world. You know, as you can see, CMB Regional Centers, we have over 50 staff members. We have, I would say, the best team in EB5. Hands down, our regional center, you can see we speak over 10 different languages. I think today it's around 13. And like I said, previous to this, we would travel throughout the world And you can see that we have our investor relations team has the ability to communicate with people around the world as well. We have our Latin American team, which is comprised of a few different individuals who travel down to South America and Latin American countries on a yearly basis. We also have presence in Africa, different parts of Asia when it comes to Russia, Eastern Europe, and then through the Southeast Asian countries. To date, we have clients from over 100 countries around the world. CMB Regional Centers we've never focused on the quick win. We've never focused on just one market or one region where we feel we could go in and try to take over that market. We've always had the worldly presence, and to make sure that we're assisting clients from all over the world that would like to move forward with their EB-5 pursuit. So as you can see, we do have, and to add, we do also have market-specific webinars that we do throughout the world that will be in the various languages that we speak. So if you were to have clients or friends that would like to join a CMB EB-5 webinar, please just have them contact us, and we'll have our contact information at the end, but it's just info@CMB EB-5 Regional Center, or sorry, info@CMB-EB5Visa.com. To go a little bit more on our project approval rating, you'll see that to date, when it comes to I-526 approvals, we have 68 partnerships that have already received an I-526 approval or 924 approval. Of those, we have 26, and actually it just ticked over to 27, I believe, partnerships that have I-829 approvals. And there is 28 partnerships that have already received a return of capital. The picture here is actually some of our investors, I believe in Group A, that had already made it full circle and also applied for citizenship and have made it, and of course, now are citizens of this beautiful country, the United States. CMB Regional Centers through the years has always been, a leader or the leader in the industry when it comes to forward thinking and things we can do to help our clients better understand our partnerships, but also our statistics, and to show that we like to provide full transparency or clarity to our investors. Back in 2014, Pat Hogan and the senior management team decided to start auditing all of our partnerships. So we hired a third-party accounting firm, BKD, who now goes through and audits all of our partnership financials and also all of the statistics for our approvals. So for investors and prospective investors looking to move forward with a CMB EB-5 partnership, we can prove our statistics and partnership financials through these financial auditing reports. So that's a thing that we were the first. We were the original to start doing auditing of all of our partnerships and statistics. And since there has been talk about in different legislative reforms about making that, sorry, losing my train of thought, but in doing that for full transparency and reporting to the USCIS. A quick overview of the EB-5 Investor Visa Program. It was originally established back in 1990 as a way to stimulate the US economy. In 1992, Congress passed the pilot program, or the Regional Center Program, that allowed regional centers to create new commercial enterprises to help pool EB-5 investors' funds together and insert them into the U.S. economy into different construction projects. Originally administered by the INS, the USCIS, or the United States Citizenship and Immigration Services, is the governing body of the EB-5 program today. So how the EB-5 program works, a majority of you probably do know, but for any new clients, the few items that that are a requirement of the program, and there's a long list, of course, that you would talk to your immigration attorney about. But a few things that you have to prove is that you create at least 10 new permanent American jobs. You also have to invest the full minimum investment amount, which is today $900,000 plus any additional fees. And you have to make sure that those funds stay fully at risk through the time until you get your conditional green card and through the 2 years of sustainment. The EB-5, there are many restrictions, of course, but that is the basic premise. You have to create American jobs and your money has to be fully at risk. Today, or since inception, there are 10,000 visas that are given out for the EB-5 program. That does count the investor and any derivatives. So that 10,000 visa number does not count individual investors. It also counts any of their family members or derivatives. So to go into the goals of every investor, EB-5 is not an investment option that people choose to get a high ROI or return on their investment. The main purpose for the EB-5 visa is the green card. So as I had previously stated, CMB has a 100% project approval rate with all of our projects. And we've assisted over 5,700 clients with that first I-526 approval. But the number one goal is the green card. So CMB Regional Centers has always had the philosophy of putting our clients first and making sure that we get them to their goals. And if we help them see success, then we will also, of course, in return see success as well. So the number one goal for all investors is that, of course, getting or obtaining their green card. There is, of course, any investor wants to see a return on their investment and a return of their investment. So to date, like I said, we have returned capital to over 1,700 clients to date. And then lastly, what I'd say is a very distant number three, of course, is a return on their investment or ROI. I had mentioned that before. This is not a way to, there's many different investment options throughout the world that, of course, have higher ROIs. But as a distant number three, any investor still is looking for that small rate of return. So CMB Regional Centers, within our partnerships, we do offer that small rate of return. We can go into more detail, of course, if you want to reach out to CMB or to the investor relations manager that you're already currently working with. So to, I guess, get to the point of this webinar today, I know I gave a brief overview of course, CMB and the EB-5 program. Matt might have a little to add, but I would, the purpose of the webinar today is, of course, to introduce Group 75 to anyone that has not already spoken to someone in our investor relations team or would like to hear more information about it. One thing I forgot to mention at the beginning, and I apologize, is at the bottom of your screen, there will be an icon that says Q&A. We will have Q&A at the end of this webinar after Matt's presentation. And during that Q&A portion, we would like to answer questions that you have. So if you have any questions, there's a chat box and also Q&A. Make sure you put your questions in the Q&A box and we will answer them in order. We hope to give at least 20 minutes at the end for a Q&A. So please provide us all the questions that you have and we would be happy to answer them. So I will pass it on to Matt so that he can introduce our Group 75 partnership.
All right. Well, thanks, Garrett. Thank you, everybody who joined this morning. I appreciate you giving us the opportunity to tell you a little bit about CMB and give me the opportunity to tell you a little bit more about Group 75. So Group 75 is, our latest EB-5 investment partnership. It's also referred to as Commerce 275. You can see it's going to be a $26.1 million raise. And obviously, with this number of investors, 29 available units, it means that it qualifies at that minimum investment threshold. It's very important. As Garrett mentioned earlier, EB5 actually requires an investment of $1.8 million. If the project's in a high unemployment area, which this one is, then that minimum investment threshold becomes $900,000. And so this is one of our latest opportunities to invest at that minimum investment threshold, and frankly, in a project that we're very excited about. If you'll go ahead to the next slide. So let me start by telling you a little bit about who we're working with on this one. You saw that name there, Hillwood. Hillwood is the investment and development arm of the PRO family. Now, one important thing that I should mention, CMB, we're not a developer. We're a regional center who goes out and looks to try and find projects similarly to a bank or an institutional lender or a private family office. We go out and we try and find great development partners to work with. We underwrite their projects, and we pick the projects that we think are the best and the best suited for EB5. You know, earlier Garrett showed you that map. We have projects all over the country, and a lot of other regional centers might just focus in very specific regions, or, you know, certainly regional centers who are developers might focus just on a very specific project, raise EB5 one time for that project, and then never do EB5 again. Well, we're in this for the long haul. We've been around for 23 years. We want to be in it for a lot longer. One of the other things Garrett mentioned is that we're a bit of a family company. Pat started this company, and his daughter, Noreen, is now the president. Pat is my uncle. Noreen is my cousin. I'm very proud to work for them. And much like CMB, Hillwood kind of has a lot of that nature as well. They're a family-based company. They're the investment and development arm of the PRO family, as I mentioned. They were actually founded by Ross Perot Jr. back in 1988. His father, Ross Perot Sr., is a very famous person. Originally got his start with IBM, became one of their top salespeople, left and went on to form 2 successful tech companies, actually even ran for president of the United States back in 1992 and in 1996. So they're a company with a long history, an amazing track record. They take on great development opportunities around the country. And we've done many projects with them in the past, and we're excited to do more in the future. If you go on to the next slide for me, Garrett. So Hillwood, as I mentioned, unbelievable track record. You know, they focus on 2 primary asset types: industrial logistics, which is going to be the focus of Group 75, and then also master plan residential developments. You know, in industrial logistics, there's really second to none. You can see they've worked in 61 different markets across 28 states and 6 countries. They have 9 offices in the United States, 5 international offices. So this is a company with just a significant footprint, able to make incredible impact on the areas in which they develop these projects, because they become huge job creation tools. In total, you can see over 158 million square feet developed. It's just a stunning amount. A lot of these projects are very large distribution facilities. Some of them are 1 million square feet. The one that we're going to focus on is about 500,000 square feet. Go ahead to the next slide there. And as I mentioned before, we've developed an amazing track record with Hillwood. We've actually done 31 total partnerships. You know, we've done a lot of these industrial logistics developments. A lot of times they're built sometimes on a speculative basis. Sometimes they have tenants already lined up that are fully pre-leased, the way this Group 75 offering is. And they've worked with clients, you know, across many different industry sectors who have become tenants of their buildings. An unbelievable list of Fortune 500 companies. You can see a couple of them here with Amazon and GM, but they've also worked with, you know, great, you know, package carriers like FedEx and UPS. They've worked with bottling companies like Coca-Cola and Pepsi-Cola, Starbucks. You know, our Group 46 partnership is now home to Starbucks. So it's a project we took on in Pennsylvania with Hillwood. The list goes on and on. They're really an amazing developer. They have a great list of relationships they work with, both on the banking side and then on the tenant relationship side. And we've been fortunate to be a part of many of their fantastic opportunities. And those opportunities have, as you can see here, brought some EB5 success to our clients. 25 of those 31 partnerships have already received 526 and 924 approval. 7 of those partnerships already have 829. And there's been repayment of loans in 14 of those partnerships. These are really just stunning numbers. And when you stop to think about it, when you start to look at other EB-5 regional centers that are out there, there aren't many regional centers who have signed 25 investors, let alone have 25 different EB-5 offerings that have already received approvals. There are projects out there right now that don't have any approvals of 526s, or regional centers that don't have any approvals, that have never been able to prove that they can demonstrate success to their clients. We've done it in Hillwood partnerships, we've done it in non-Hillwood partnerships, but the relationship that we've been able to build with this group is really special, and it's something that we're very proud to be a part of, because at the end of the day, it's brought success to our investors, and that's the ultimate goal. They want their green cards, and then every investor wants their money back, and we've been able to achieve that in a lot of these Hillwood partnerships. And we're confident that in the future, we'll continue to see more approvals and more repayment of these loans as time goes on and on. So let's drill down on Group 75 in particular. So we call it Commerce 275, and Commerce Business Park, which is actually gone through a little bit of a rebranding. It's now being called Pinnacle Landing Commerce Park. It's located outside of Detroit, Michigan. I'll get to that here in a second, but it's actually part of a master planned business park. It actually sits on land that was purchased from the county that was originally Pinnacle Racecourse, a horse racing track. That business venture went under, the horse race track was closed, and so the county needed to redevelop it into something that would be a new job creation engine for the area. A lot of people know Detroit, home to many auto parts manufacturers, GM and Ford. And they've gone through some rough times as jobs have been shipped overseas, or jobs have been replaced by automation. And so this is a market that's really hungry for these types of opportunities. And I'll get to why this area is special here in a second, but it created a unique opportunity for Hillwood. Hillwood and another joint venture partner of theirs, Sterling Group, which is a local Detroit-based company, actually acquired this land and is redeveloping it into Commerce Business Park, or what's now called Pinnacle Landing Commerce Park. This building will actually be one of the first projects to be developed, and it's going to be a modern Class A build-to-suit logistics facility. About 517,000 square feet. The numbers might fluctuate just a little bit as they kind of find their way through construction. It's going to sit on a 51-acre land site. And as I keep saying, this is a fully pre-leased project. It's pre-leased by a Fortune 500 e-commerce retailer. I can't disclose the name of that retailer on the webinar right now. If you sign an NDA and request additional due diligence information, we can share the name of the tenant at that point in time. And we take confidentiality very seriously, both on the development end of our projects, but also with you. We would respect your confidentiality the same way that we respect the confidentiality of the development partners that we work on. It's very important. And so, again, we could actually share excerpts from that lease so you can see how that lease is structured. And it's a 15-year, 180-month lease agreement. Lease revenues in that one are fully guaranteed by the parent company of the tenant. Important to note, construction on this one is actually already started. They have been working with this tenant for the last several months. And to date, they've spent about $15 million on early pre-development work at the project with the tenant. And that's allowed them to get a good head start on the project. You can actually see significant construction taking place there if you were to visit the site. You can see here, and it's actually anticipated to be completed in third quarter 2021. So it's a relatively compact construction schedule, which we like. It means, the money's going to go into the project. The jobs are going to get created. There's going to be a tangible asset there with value. And in this case, we're going to have a fully pre-leased project by a Fortune 500 tenant. It's going to be a very marketable project to sell to a long-term holder like a REIT or a retirement fund or someone that would want to be able to hold this asset long-term. Go to the next slide. As I mentioned, it's already underway, so you can see significant progress. There's actually a newspaper article that was put out by the Detroit Free Press very recently, December 10th, so just a week ago. And it talks about the progress there. It talks a little bit more information about the project and the groups involved. Feel free to check those out online. As I mentioned, projects in Detroit. And Detroit is actually a relatively large metropolitan area. It's, a lot of people from around the world, they know New York, they know Chicago, they know Los Angeles, they know Miami, maybe Dallas, some of these big markets. Detroit, I think, is internationally known because of the auto industry, but it is a relatively large market by US standards. And it's one that's going through a bit of a rebirth. As I mentioned, the auto industry has continued to evolve and take new shape. And then there's other industries moving into the area that are helping to rebolster that economy. And certainly projects like this will help to do the same. You can see it's actually located right there on the US-Canadian border. If you go to the next slide, we can zoom in and look at this in a little bit more detail. Project site's really close to the Detroit-Wayne Metropolitan Airport. It's close to major ground cargo and rail cargo points, as well as that US-Canadian border. So it's a great hub for logistics to enter the United States from Canada or from obviously the Atlantic through the St. Lawrence Seaway there and through the Great Lakes system, and be a hub for distribution in the upper Midwest. So it's uniquely positioned. It's very attractive to this tenant for those reasons. And then, of course, the business park itself is going to be a hub that can serve a lot of different interests, not only logistics into the upper Midwest, but parts and supplies and things like that for the auto parts industry. We're primarily focused on this build to suit. We're collateralized only by the build to suit. And so we're focused on that tenant and that project alone. But I think it as well as the business park that Hillwood's got going there is uniquely positioned for success in the future. Another key point, it's a targeted employment area. Why do I keep saying this? Well, as I mentioned, if you don't have a project that's located in a true high unemployment area, then you need to put in the full investment amount of $1.8 million. In November of last year, new regs came out and it tightened the areas that qualify. And CMB had been prepared for this. And we had a long pipeline of projects that we knew would qualify under this reduced investment threshold, that would qualify for the reduced investment threshold under the new TEA criteria. This one easily qualifies in just 3 census tracts. And, people constantly ask, well, hey, unemployment is changing. The national average might change, might fluctuate. Well, what's going to happen here? Well, what we'll do is, we'll continue to raise EB-5 funds. We'll continue to look at the project. The project is using data from 2019. When the new full 2020 data comes out in approximately May of next year, we'll look at that data. And if we can't continue to raise on it after that point in time, we won't. But we're pretty confident that this is one that will continue to qualify as a TEA. And obviously, taking weird angles at how to approach TEA data, looking at it by month to month or any nuance type things like that is not a level of risk that we're willing to take or to subject our investors to. So I can firmly tell you CMB is one of the most conservative in the industry when it comes to finding and structuring these TEAs to make sure that our investment partnerships are set up for success. So the capital structure, really simple and straightforward. So as I mentioned, there's 2 development partners in this, Hillwood and then their partner, the Sterling Group. Sterling Group has a relatively small amount of capital going into the project. They're a local-based developer. They're helping with entitlement and process and certain development functions that will assist Hillwood. Hillwood is the lead developer and the biggest equity participant in this project. I believe they have about 90% of that 11.7 million going into the project, and the other 10% would be coming from their partners, the Sterling Group. But overall, that developer equity number is strong. 11.7 million going into the project, comprises 14% of the overall contribution to the capital needed to build the project. The EB-5 loan, 26.1 million. Very conservative layer of EB-5 going into that. What you'll see from CMB is that most of our projects kind of fit that 20 to 40% of the capital stack piece. Biggest reason for that is jobs. We want to have a massive buffer in jobs. We want to make sure that there's no chance that this project is going to fall short on job creation. And then you can see about 56% of the capital coming from the senior construction lender. In this case, that lender is anticipated to be Comerica Bank. So Comerica Bank, a Detroit-based bank, one that Hillwood has a long-term ongoing relationship with as well. So first lien lender will be the bank. That's the senior loan. CMB will be the next in the priority of repayment, that 30% of that EB5 capital. And then, of course, the balance going to the equity participants in the project. Now, EB5 takes a while to raise. And the markets are in a state of flux right now. COVID-19 has impacted the world. As many of you know, it's created challenges with liquidity and things of that nature that have elongated the time in which it takes for EB5 to raise. So a lot of people ask us the question, well, what happens if the project is progressing through construction faster than you can raise EB5 to be used in the project? Well, that's something we have to plan for, and that's something that we have planned for with this development partner. So Hillwood will actually overfund their equity. So in total, they're going to put in $37.8 million of equity at the front end of this from their sources, other available equity sources of the developer. And as the new EB5 raise is completed, it will start to back that number down to the 11.7 figure that you saw on the previous slide, that 14% of the overall equity in the project. What happens if we don't raise EB5? They end up with more equity in the deal. That's just how it works. They're trying to insulate their risk, and they're comfortable enough in the metrics of the deal and in the project itself to be looking at other available sources and funds and equity to bridge that EB5 and kind of hedge the possibility that the EB5 raise falls short or can't be completed in time. We're confident that we'll complete this EB5 raise during the construction period here, as we have on all other Hillwood projects. But to make sure that we're protecting the investors, that there's no chance that the project will just stall out and stop halfway through, Hillwood's going to overfund their equity. And this is important. Why is this important? Well, if you look at other regional centers in the industry, they don't always have mechanisms in place to protect their investors this way. Sometimes there might be a bridge loan in the project from an outside source, might be very expensive. And in most cases, it's going to take a superior position to the EB5 debt that's coming in. So if the EB5 raise falls short, you may have some slice of that bridge loan still remaining in the deal with a position in priority ahead of the EB5 loan that's expensive, that's burdensome to the project. And I think it creates a layer of risk. So this is something that helps insulate that risk to the EB5 investors. Job creation. As I mentioned, we're pretty conservative on the job creation side of it. 29 investors, everyone needs 10 jobs. Now, you only need 10 jobs, and that's something that I talk about all the time. You don't have to create 17.65 jobs, but if the project is going to create 17.65 jobs per investor, you got a pretty good buffer there. So in total, we need 290 jobs. This thing's going to create 512. You're going to have a job creation buffer of 76.55%. If there's some reason why the developer and the tenant would decide to reduce the overall scope of the project, and spend less money and create less jobs, then you have a buffer. A lot of times we see people run these buffers very thin, or they'll be overly reliant on this first column here. You notice that first column says direct jobs. If a builder or a regional center is too reliant on those direct jobs, it can cause the project some problems. In a rough economy, if there's challenges to the operations of the business, they may have to lay off employees. Well, then there goes the job creation buffer. And if you end up with a situation where you fall short on job creation, the investors pay the ultimate price for that. Remember, if you don't create your 10 jobs in EB5, you'll get a denial at your I-829. And that could mean that you've been in the United States now for 2 years, maybe more than 2 years, because you're waiting for that 829 to be approved. You've moved your kids here, you've bought a home, you've bought a car, you've maybe opened a small business of your own. If you get your 829 denied, it's immediate deportation. And that's not what we want to see ever happen for our investors. We've never had a denial at the I-526 or I-829 stage related to our projects or job creation methodologies. And we'll plan to never have that happen because we're always going to be conservative in how we set up these projects from a job creation standpoint. So the metrics of the deal, pretty simple and straightforward. So overall cost of the project you saw on the previous slide is about $86 million. Net sales proceeds of this project are expected to be a little over $105 million. Remember, this is a project that's going to be pre-leased by a top Fortune 500 tenant with a long-term lease, a 15-year lease. We're not dependent on the lease revenues coming in year after year and accumulating and paying off the senior loan and the EB-5 loan. That's not the exit strategy here. The exit strategy in this one is simple and straightforward. Hillwood's going to build it, the tenant's going to occupy it, and then Hillwood's going to look to sell this project to a long-term end user. This is something that Hillwood does project after project. Actually, if you do some simple due diligence, do some Googling to see Hillwood sales of logistics portfolios. There's even recent articles out there about Hillwood selling significant portfolios in logistics. It's something that they do regularly. They're one of the best in the business at it. And this will be their plan on this one. They'll get it built, that tenant will take occupancy, and then they'll look to sell this project to a long-term end user. Obviously, if it yields $105 million in net sales proceeds, they're going to repay the senior loan first, that roughly $48 million. Then they're going to repay the EB-5 loan, the 26.1. And then the balance is distributable equity to Hillwood and their joint venture partner. Overall, when you look at it that way, the project is relatively low leveraged, and you're about 70% loan to the anticipated value. So you need a drop in the overall anticipated sale value of this project of roughly 30% before you would see a situation where the EB-5 investment and the senior loan would be impacted in terms of maybe an inability to repay the full amount upon sale. So we're pretty confident in these numbers. Hillwood, as I said, is one of the best in the business. They'll look to sell this. This is their projections that they've provided us, and we can share this obviously with you. So if you go to the next slide. Now, how is the project collateralized? And that's something that we haven't really gotten into. What we're doing is we're going to aggregate investors for Group 75. The investors will invest into the Group 75 partnership, and then Group 75 will make a loan to Hillwood. So you're not investing directly in the project. It's not an equity investment where you're investing directly in the project. You'll actually have a loan, and all of our Hillwood projects have been structured that way. The loan is collateralized, and we're going to have certain pledges and certain protections in the loan to prevent things from happening that could be negative to the EB-5 partnership. And believe me, if something goes awry, if something happens, if the borrower defaults for any reason, we would pursue our default remedies under the loan. And we've done 31 EB-5 partnerships with Hillwood, and they're a development partner that we are very proud to work with. They've never defaulted on a CMB loan. They've never been late on interest payments. Every loan that's reached maturity, they've repaid on time. And so we are confident in our relationship with them, but it doesn't mean that we wouldn't enforce the terms and conditions of our loan agreement. We absolutely would. And so what do we have in this case? Well, first and foremost, we have a cash flow pledge that if there are distributions from the project, we immediately are going to capture 50% of those distributions that would go to Hillwood. So let's just say Hillwood builds the building, the tenant takes occupancy of the building, and they do start paying their lease revenue. Well, there is money that's going to be generated from that lease revenue, and it could potentially be distributable income towards Hillwood. They have 6 years to sell this project. There's nothing that says that they have to sell it the day after it's completed. So if they go through a couple-year period where it's cranking out lease revenue, we would get to capture 50% of any available distributions to Hillwood and have that collateralize our loan until the actual sale takes place. Now, if they were to ever default on this, we would capture 100% of that distributable income until our loan is repaid. So if there's a default for any reason, maybe Hillwood has some sort of internal problem that prevents them from continuing to pay our debt service, or there's some technical default. They don't provide us certain reporting information or things of that nature. One of the biggest threats we'd have is we could capture 100% of their distributable income. And that's what this distributions pledge is. It's the primary collateral piece for this project. In the event of a default, Hillwood would be forced to sell this project and repay the EB-5 loan prior to receiving any distributions. If there's no distributions, too bad for Hillwood, they've got to repay the EB-5 loan. That's how that works. You'll see other EB-5 providers talking about different pledges, different collateral structures that they have. You know, these are all an evaluation of risk. Who's the borrower you're working with? What's the project that they're taking on? People like to disguise the collateral that they have sometimes, and I don't understand why they do that to EB-5 investors, because they should be disclosing that information to you in your offering documents. You should be able to see through, you know, any strange marketing approaches that they might take. You see some people saying, hey, you'll have a first lien, but they won't tell you what you have a first lien on. Well, in this case, you got to make sure that you understand what your pledge is. In this case, ours is a pledge of 100% of Hillwood's distributions in this project. So it's not a pledge of real estate. We don't take the land. We don't take full ownership and control of the project, but we take 100% of their distributable income that could come off of this. And the reason why we take this collateral pledge is because, look, they have a long history and a track record of building their projects on time and on budget. And this one is already pre-leased. We can see evidence of that lease agreement. And so we know the likelihood that revenue will be generated by this project and how long that revenue is anticipated to be generated. And that can tell us what we expect the overall market value for this project to be at the point in time in which they look to sell the project. It's a very strong project. And you know, the other thing that we have from Hillwood, and this is a primary collateral piece as well, is this completion guarantee. Now, why is a completion guarantee important? Well, we didn't get into it much, but jobs are created when the money is spent. When we look at job creation on this one, I mentioned that we're not going to be counting the direct jobs. So we're not going to be counting the people working on site, you know, building the project, or the people working inside the distribution facility when it's completed. We're going to look at indirect and induced job creation. This is job creation that comes off of all the money that's spent on the construction and completion of the project. And so long as they spend all of the money in their budget, we know that job creation is going to be there. So if something were to happen to prevent them from continuing to move forward, we'd want a completion guarantee in place so that we know that there's someone on the line to make sure that they put in the additional capital needed to complete this project. And you know, once it's completed, once the project is fully built and that budget is fully depleted, we know that all the job creation will be there for our EB-5 investors. Not only that, obviously, there'll be a tangible asset with value at the end of the day that is going to be pre-leased to a Fortune 500 tenant that will have value on the open market for a long-term holder. So those are our primary collateral pieces. And guys, that's really Group 75 in a nutshell. I know we're going to open it up for Q&A. You know, I wanted to say a couple other things. Right now, there's other projects in the industry that a lot of people have taken a look at. And, you know, frankly, we're confident that Group 75 is one of our best offerings we've put out there to date. One of the things that gives us a lot of confidence in it is the asset type, logistics. Look at what's happening. And I know we'll probably talk about it a little bit more, but look at what's happening in logistics. It's growing rapidly. You know, people are stuck in their homes, they're doing a lot of online shopping. And so these companies are growing their distribution facilities and their distribution arms. You know, companies like Amazon, Target, some of these other online shopping companies, Wayfair has been a tenant that we've worked with in the past. You know, they've been they've gotten, as other industry sectors have faltered, you know, fortunately, those industry sectors have gotten a boost from kind of the way in which people are having to live these days. So it's a project we're very, very, very proud of, and we look forward to answering any questions that you have. So I'll turn it back over to Garrett, and we'll open things up for the Q&A.
Yeah, so thank you, Matt. Great presentation. And so we had some questions actually sent ahead of time, so we wanted to go through those as well. One of the questions that was sent over was, why should I invest in logistics over different project types? Matt did just touch on this briefly with the tenants that have, of course, signed lease agreements with Hillwood projects in the past. And but we actually wrote an article or posted an article to our website just a couple weeks ago that actually talks specifically about logistics and e-commerce growth throughout the United States. And actually in August, Forbes reported that e-commerce had seen 129% year after year growth in margin in the United States and Canada. We all know that due to the global pandemic, it has shifted you know, a lot of shopping habits, where a lot of people would go out to brick and mortars and, you know, do their shopping, especially right now, you know, in the United States and of course parts of the world with Christmas. You know, there's a lot of people that over the years, you could see probably a trend over the last 10 years, people doing ordering online. Well, it's even more today. And in that Forbes article, they also had quoted by the end of 2020, e-commerce sales were expected to balloon at $4.2 trillion. That just shows how much the e-commerce growth, you know, in the United States has grown. Yahoo Finance warehouse were quoted that warehouses, fulfillment centers, and other industrial properties are on the bright spot of commercial real estate, which had otherwise been pummeled by the coronavirus pandemic. Secondly, the pandemic has accelerated the shift away from physical stores to digital shopping by roughly 5 years. So that just shows how much it's grown over the years, that it's shooting over projections by 5 years right now. So we know that as more and more people prefer to have things today shipped and dropped off at their front doorstep, it just it shows the need for these logistics and distribution types facilities. Hillwood, to Matt's point, this is not new to them either. They've been doing this for many years, and we consider them, you know, true experts. Like he said, they've never missed an interest payment, and they have, I think, over what was the stat again? Over 150 million square feet.
Million square feet. It's really impressive.
And that just shows their expertise, of course, when it comes to the development of these logistics centers and also the sell-through. So next question. Matt, I'll hand this one to you. What is the likelihood of completion happening by Q3 of 2021 for the Group 75 Commerce 275 building?
Yeah, good question. I mean, look, you have a project that's already under construction. They've spent $15 million of the $86 million budget. The early work that was completed on the project was done through what they call a cost reimbursement agreement with the tenant. And while they were negotiating the lease, they wanted to make sure that they could get a head start on the project. It should be known that this is a tenant that our borrower, that Hillwood, has worked with many times in the past, and actually CMB has offered multiple partnerships that have built buildings that this tenant has now been a part of. And so we're confident in you know, how the relationship has worked between those two groups. We know that, you know, once Hillwood starts these buildings, they don't stop. They have a long-term lease in place. They've got a group that is eager to expand, has been expanding all around the country. And so, you know, it's fully capitalized in that the equity is there to complete this project if need be. And Hillwood's got deep banking relationships. If there were any other thing that were to falter or anything like that, remember, this is a project that, you know, has everything going for it in the right direction. So I think it's incredibly likely that you're not going to see some sort of stall or falter in the ability for the project to continue to move forward. And, you know, look, people have asked the question, and I'm getting a little long-winded on this response, but people have asked the question too, well, what about COVID? You know, you look at what's happening, especially on the West Coast. On the West Coast, you know, some of these state governments have, and Michigan as well, have shut down certain industries. Well, the construction industry has been a little bit isolated from that. There's been, you know, reduced labor forces, social distancing measures, and things like that. But for a lot of these construction projects, they've been able to continue to move forward even through the worst of the COVID conditions. And so, you know, we're entering the winter months. In Detroit, it's the northern part of the United States. It's cold there. And so there's always a natural slowdown of certain construction activity when you get into the cold months. And so I don't think that there's going to be any major deviation from the timeline. I think it's more likely than not that you'll see this project get completed by that late third quarter timeline of 2021. All
right. One question, of course, from one of the participants. Thank you all again for your questions. How long or how much time does the EB-5 process take? So currently, the EB-5 or I-526 processing times from the day your petition is submitted, the median processing time right now is around 30 months. We've lately seen processing times shorter than that, but the rough estimate on the USCIS website to get through 50% of all petitions right now is 30.5 months. Like I said, we tend to see less than that. So if you would assume that it's going to take roughly 2.5 to 3 years for the first petition to be approved, once you receive your approval, you can then set up a consulate interview and or an adjustment of status if you're already stateside or living within the United States on a different visa category. From that point, once you receive the conditional visa or green card, you have to live in the United States for a full 2 years of conditional permanent residency at the point in time which you can file your 829 petition, which then removes the conditions. The 829 petition that is filed, of course, you're proving that your money was fully at risk during the full time of your 2-year conditional residency and that the 10 jobs were created based on your investment. So the processing times we're seeing right now, outside of, say, retrogress countries, you're probably looking at the full process taking in between 5 and 6 years. That is roughly the time frame of our loan. I see there was another question in there about how long would I be in the investment, or how long does the process take? They kind of mirror each other in the sense, or run parallel next to each other, that you're looking that the immigration process and the investment timeline are going to be in that roughly 6-year time frame. Of course, your immigration attorney is going to be able to answer that question and provide you a little bit more clarity based on the processing times that they're currently seeing with their other clients or investors that have chosen to do the EB-5 visa. I hope that answered your question. Another question from somebody, Matt, this might be a question that we can answer directly right now, but how does border closure with Canada affect this facility? So we'll see. I don't know if you do have an answer for that, but of course, the distribution out of Michigan is kind of the center point of the United States. So it's not always, of course, that we're looking for this facility or Amazon's looking for this facility to, of course, ship packages to Canada. But I'll let you I'll see if you can answer this question, Matt.
Sure. And, first and foremost, it's not operating right now. And so it's under construction. It's going to be completed in the 3rd quarter of next year. I don't know how the world will change between now and then. I wish I did. I'm optimistic with the vaccine coming out, with, into that period of time, midsummer next year, or late summer next year, I'm hopeful that, we'll be in a little bit better situation with this whole COVID situation as well. But, we'll have to wait and see on that. As it pertains to the ongoing construction activities, that's not going to impact it. As I mentioned, the lease is already in place. The way these leases are structured, because we have seen the lease, we've seen other similar leases from Hillwood and between this tenant, those lease revenues are guaranteed. So they take occupancy of the facility, they come in, and, there's certain provisions in the lease that obviously, relate to whether or not the project is completed under certain specs or certain qualities or things of that nature that can come back to the developer. But, once the tenant is in place, they're going to be operating and they're going to be paying lease revenue. So I'm not overly concerned that the Canadian border closure is going to impact this project. It's certainly not going to impact the ongoing construction activity or the ability to complete the project. And so that's something that we're very confident in.
Thank you, Matt. All right, next question. One of the questions is how much does CMB charge outside of the $900,000 investment? Good question. So to subscribe into a CMB partnership, the full subscription amount is $970,000. There is the initial $900,000 investment that fully has to go to the at-risk investment or into the NCE or new commercial enterprise. And then that $900,000 has to stay fully at risk during your through the full year 2-year conditional residency. The $70,000, of course, subscription fee does go to an affiliate company of ours for marketing purposes and promoting CMB Regional Centers throughout the world to introduce clients to CMB Regional Centers. Next question.
Yeah, let's jump right into this one, possible expedited processing for the project. And this is a question we get a lot. And I want to, I want to talk about this in larger detail. There's two things. People always ask us, well, does it have 924 pre-approval? And then the next thing they ask us is okay, well, does it have qualify for expedited processing? Well, to specifically answer your question, yes, this project does have the possibility to receive expedited processing. We have forwarded a request on this project for it to receive expedited processing. We've asked for expedited processing based on the criteria that are outlined for receiving that expedited processing. And we're awaiting an answer from USCIS. So it has not been approved for expedited processing. Another important thing to remember is that in the projects that have been marketed out there in EB-5 as having received expedited processing, it's not necessarily a guarantee that every investor in the partnership will receive expedited processing. And that's something that I want to create an important distinction on. The USCIS reserves the right with each I-526 petition review to determine whether or not expedited processing is warranted. And even when they've kind of given a blanket approval, as we've seen on projects that were available, or a particular project that was available over the last few years, the expedited processing is something that has seemed somewhat erratic. And I don't think investors, from my common knowledge, I don't believe investors who have invested in 2020 into that particular project have been receiving expedited processing. And that's largely because the program has changed. There's new rules in town, right? There's new regs that are out there. And that kind of dovetails nicely into the pre-approved project concept. I actually just checked this morning. I've got it still up on my screen here. Processing times for 924 petitions. So this is the vehicle for filing for a 924 pre-approval. It's a I-526 exemplar petition. It's filed on a 924 form. It ranges from 52.5 to 56 months. So the vast majority of projects that are out there, even today, marketing, saying that they have a 924 pre-approval, have a 924 pre-approval that was received on a project that was filed under the old regs. And so, I don't know what that really means. If you want to put much stock into that, I think it's probably nonsense to sit there and, concern yourself with looking for 924 pre-approval. And I want to give you a little history on that. I could talk for days on this, so I'll try and keep it short. 924s are not required to be filed on projects. And regional centers are not required to have pre-approval of a I-526 exemplar petition before they go out and market. That's not a thing. And a lot of regional centers that don't have history, don't have track records, or are working with brand new developers, they go out and they seek 924 pre-approval, and then they use it as a marketing tool. It's not it should not be used as a marketing tool. We've worked with over 5,500 investors from around the world. We have over 4,800 I-526 petition approvals. That's what a 924 is. It's a 526 exemplar. So we've been able to show that we've put together partnerships time and time again. We've never had one denied. And so we've never filed 924 pre-approval before. We've never gone out and tried to market a project with 924 pre-approval. It's nonsensical to us. We know that we know how to, file a proper I-526 petition. We know that we can get our investors' approvals. The regional centers that don't have any track record try and use that 924 to be able to tell you, look, I know what I'm doing, and now you can trust that you're going to get an approval. But the fact of the matter is that, unless you're filing under the exact same criteria with the exact same documents, and nothing has changed over the last several years while that project was waiting for its 924 pre-approval, there's probably not much value to that 924 pre-approval letter that they're marching around with. And so when investors come and they ask me for, evidence that we have some sort of 924 pre-approval, I think it's nonsense. And I understand why investors ask. If you do basic due diligence on EB5, there's a lot of people out there saying, look for a project with 924 pre-approval. It's just a way to, protect yourself, because if you find your way you find your way towards working with a regional center with no history, I'd probably be asking them for a 924 pre-approval because they don't have any ability to show that they know what they're doing. The opposite is the case with CMB. We have all the ability to be able to show that we know what we're doing. And so we don't file for 924 pre-approval, in an anticipation of using it as a marketing tool. It's just not what we do.
One of the next questions that came through, and thank you, Matt. One of the next questions that came through is, do you need to hire your own immigration attorney, or does CMB Regional Centers have our own in-house immigration attorneys? Well, number one, that's a huge red flag, and you should watch out for any regional center that is asking you to use their attorney. Here at CMB Regional Centers, we like to split the regional center investment with the immigration. So that's where I had said previous, when it comes to your own immigration process, make sure you consult your immigration attorney. CMB Regional Centers does not have our own immigration attorneys on site. We never have, and we never will. So to split that conflict of interest, you do need to hire your own immigration attorney to help you with your immigration pursuit. The question in there was, how much does an immigration attorney charge? That's something I cannot comment on. It really is a case-by-case basis, I would think, with those immigration attorneys. They're the ones that are going to assist you, of course, with the source and path of your funds, and help you collect all of the personal information needed for your petition. So to simply answer, yes, you would have to retain your own immigration counsel to file your petition with the USCIS.
Sure, I'll take this next one that popped up. Any new projects if there are enough investors for Group 75? So actually, it's a good question. We have 29 total units for this partnership. We've actually already subscribed, I believe, 4 units to this partnership, Garrett. And so Yep. So 4 units have already been subscribed for the partnership. So there are still 25 units available. We do expect it'll take another couple months for this project to fill up. But actually, we are prepping for the next project that we'll release. It'll be a brand new CMB EB-5 partnership. It'll be our Group 79 partnership. And, conveniently enough, it's actually gonna, likely, and this is, something that's still in the works, so we don't have additional information or due diligence info to share right now, but it'll be another build to suit for the same company, Hillwood, and it's gonna be located across the street from this particular partnership. So it's a little bit bigger building, but another build to suit project. It'll be, relatively similar, or almost, I say relatively similar, it'll be very, very similar, almost identical to this partnership, be a little bit bigger partnership, a little bit more unit availability based on kind of what we've anticipated. So I think that we'll probably be ready to release that partnership, sometime late Q1, early Q2 of 2021. And between now and that time, we do expect that we'll have units that continue to be available in this partnership. But, our goal is to always have projects available. So if we need to push the timeline a little bit and have that project ready sooner, we can probably do that. It's a development partner that we've worked with. And, our big issue is we don't want to put too many projects on the market and confuse decision-making and make it complicated for our investors. So if we can piggyback a project off of this one that's very similar, that's a good approach that we like to take. And that's kind of what we're planning to do here. So.
Thank you. Another question that was asked, and Matt briefly just touched on it, but is there a deadline for my EB5 funds to be accepted into this project? So in EB5, you want to make sure when it comes to funding an EB5 investment that there's still construction going on in that project, so that we can ensure that your funds are being used for job creation. As Matt said, previous in his presentation, the construction is expected to be complete in Q3 of 2021. So roughly 9 months from now, maybe 10 months from now. We do not see this investment opportunity going that far. We see, and sorry, to clear, we do have 5 investors. I know I said yes to the 4, but we do have 5 investors in this. So we have 24 available units left. And we expect those 24 units to be fully subscribed far before the construction would be finished in that project. But to comment again on the conservative nature of our country, of our company, we're always going to make sure that your funds are used during the construction of these projects.
Yeah, and I'll add to that a little bit. And there's another question that came in immediately after that I'll touch on briefly, but it's also well suited for a conversation between a client and their immigration attorney and their client and a CMB investor relations manager who can help in a little bit more detail. To kind of address both questions and add to what Garrett said, yeah, that the goal is for us to always try and get the money into the project while construction is still ongoing. This one's going to be completed in late July, so we want to try and see that all the funds are in there, before August is really kind of what our timeline is. Now, EB-5 requires that a bridge loan or bridge funding can remain in place, and EB-5 can be brought in even after construction is completed. We're always weary of challenges to those types of situations, so we just try and be as conservative as we can and try and get all the EB-5 money raised while construction is ongoing. It's the clearest way to show the USCIS that you still have nexus to the job creation that's ongoing. It might be a little overkill on our part, but we just think it's a good strategy. So someone then asks, is there a limit? There's a limit of $250K a year per person to be transferred from my country. How will it be? How will I be able to transfer that amount? Well, I'm not going to make an assumption, but I know that India, for instance, has their LRS that allows 250 per person to be transferred, annually. And, that is a date that resets on April 1st when the fiscal year changes. And so there are different strategies that you can work on with your immigration attorney. I would think that this is something that you would want to speak to your immigration attorney about first and foremost. What are some ways in which you can transfer that money and still be compliant with, the law in your home country? And the reason why I bring this up is because this is incredibly important part of EB-5. We always talk about it. There's a few legs to the stool, right? You got to pick a regional center that you really trust and you really want to, work with. That regional center, you should know a little bit about the development partner. If they're one and the same, you should be wary of conflict of interest, but you should know, more information about the project and make sure you're comfortable with that side of the investment that you're making. And then you also want to have someone who's going to be an advocate for you personally, and that's your immigration attorney. As Garrett mentioned earlier, we don't make you work with any one particular immigration attorney. We've worked with a lot of immigration attorneys, a lot of different backgrounds that have been able to work with clients in very specific countries and deal with challenges such as, moving funds from their home country in order to facilitate their EB-5 investment. And between that immigration attorney and then also, a chartered accountant or a CPA in your home country, they're going to be able to advise you on what the best paths are. Because the USCIS does care. Not only do they want your money to come from a lawful source, but they want to know that your money was lawfully transferred out of your home country and into the United States. So if you break the law in your home country, they're going to look at it as, well, why wouldn't you break the law in our country? Why would we let somebody in like that? So it's important to navigate those challenges. Now, one thing that we will do, and I'll mention this just briefly, Group 75 is going to be the first partnership that we've released to the market where we're actually going to allow people to kind of fund in increments. Now, our goal will be to have everybody complete that funding, by that August deadline. It's not something that we're going to allow in every situation. We're going to reserve the right to look at your case specifically and figure out how to do it. But all the funds would need to be in by August. And so that's something that we can talk about in more detail. If you're somebody who's interested in Group 75, wants to sign an NDA, we can figure out if that's a fit to fit your specific case. And, we're going to reserve those primarily for challenges as this person's bringing up. Moving funds out of one country and into another. Is there a way in which we can help solve that? Well, there might be with Group 75.
And that's to answer, to segue off that, someone did put in the chat a question about, how do I learn more, or how do I move forward with a CMB EB-5 investment? To go on to what Matt just said, just about the last thing, what we would require is just reach out to us, either by phone or email. We will send out an email later today that, of course, has the video link, provided in the email, so you can watch and maybe rewatch any points that you might have missed or you wanted to hear again. But in that, you will receive our contact information. Please reach out to us by phone, email, our website. We will have one of our investor relations managers reach out to you. You will just have to sign an NDA, and once an NDA is signed, we can provide you the Group 75 offering documents. Those offering documents you would just need to review and to better understand the partnership, how it's structured. And then we can answer any further questions that you would have in your due diligence process, alongside with then your immigration counsel assisting you with any immigration questions you have. So I hope that answers your question. To briefly touch on one question that was asked is, what happens if the developer pays back the loan, but some clients are still have 829 petitions pending? So to briefly touch on this, so as I had stated previous, and I think Matt had too, the funds do have to stay fully at risk. That is a component of an EB-5 investment in your immigration pursuit, that the funds have to stay fully at risk during and through the point of your 2-year conditional residency. So to back up a little bit, a CMB loan or a CMB partnership is structured in a way that the loan is for 6 years. So any EB-5 investor looking to move forward in a CMB partnership, you should always expect that the loan will be, outstanding or with the borrower for the full 6 years. Now, if the developer were to pay back the loan and you were still ahead of your 2-year conditional residency, or you're still within your 2-year conditional residency, it is policy or rule by the USCIS that your funds have to stay fully at risk, and that the regional center would have to look for a way to redeploy or keep those funds at risk. Now, CMB Regional Centers, as you can see with our success rate, and Matt had touched on it earlier, we have over 4,800, or I think actually even over 4,900 I-526 petitions already approved. And we have around 1,700 I-829 approvals. So we don't simply just redeploy the funds without a very extensive due diligence process. Any redeployment that we would take on or lend to keep your funds fully at risk so that you can still get an I-829 approval or meet the rules of the program would go through an extensive due diligence process. We would ask for pro-forma, all the due diligence papers that we would ask for the initial EB-5 investment. So it's nothing that we would do without really diving deep into that project or into the project documents. And Matt's team is the one that oversees this type of redeployment.
Yeah, let me jump in a little bit on redeployment. Redeployment is a function that I handle with my team. And, not everybody needs their funds to be redeployed. As the question noted, there's going to be some investors at the time of repayment, or there could be some investors at the time of repayment, rather, that are eligible based on program standards to receive the return of their capital. And we'll look at our offering and figure out how it's structured and how we want to handle starting the process of returning capital. And there could be the ability to start returning capital to those investors while there are other investors in the partnership that still need their funds to be at risk. And so there's some different ways in which we can handle that. Our redeployment strategy is pretty straightforward. What we're doing is, at the time of repayment, we're doing what I just said. We're looking to see who's eligible to receive the return of their capital and figuring out if we want to start getting capital back to those people. And then we're trying to figure out, how long it might take for the rest of those investors in the partnership to get through their sustainment period. And then we're going out and we're trying to look for redeployment opportunities that not only fit those timelines for those investors that need their capital to be redeployed, but fit program standards. And as a lot of people might know, those standards have kind of changed a little bit, and they're a little uncertain. There's some regional centers out there in the industry that thought they had a slam dunk mechanism for redeploying capital. A lot of people thought they could just buy bonds on the secondary market that would carry very little risk. They'd go out and they'd buy some municipal bonds, and at the point in time in which investors wanted out, they could sell those bonds back to the same market and grab their money back. Whatever was yielded from those bonds, the investor would get, and they'd go on their way. And USCIS came out and they said that is not a permissible strategy. And so that actually changed the course and the way in which a lot of other regional centers operated. CMB has never done that. And CMB, since our earliest days, have actually set up our documents in anticipation that this might become an issue. People say, like, well, how did CMB have the foresight to try and structure their documents for redeployment? Well, it's a really pretty simple, no-brainer. We tried to pick projects that we thought were really strong and had the opportunity to be completed and maybe even repay early. So we knew that if they did repay early, there might be a situation where investors, not all of them had gotten through the process. Maybe you had someone who filed late, or, they had some RFEs on their, personal side of their petition or whatever it might be that hung them up. We needed to be able to have a mechanism to keep those funds at risk so that they'd remain eligible for their EB-5 benefit. And so our earliest documents, all the way back in the 90s had the redeployment concept in it, and that blows a lot of people's minds. As a regional center, we've been redeploying money since late 2013, early 2014, and we take on a couple of different primary strategies. We look to try and do short-term bridge loans and things like that when they marry up best to the terms, or we look for redeployments into existing operating assets that are well structured, low leverage, things of that nature. And, we try and look at varying terms on those. It might be a year, it might be a couple of years. And then, of course, we look at other ground up new development and things like that for funds that we know can stay out a little bit longer. And what we try and do is we try and underwrite those projects to meet the same, collateral criteria, using the same techniques, and structure them very, very similarly to those original projects. So part of what you need to do when you do your due diligence, and it shouldn't be the whole thing you do, because I've seen this go wrong as well, but part of what you do when you do your due diligence in EB-5 is you look at the track record of the regional center overall. How many projects have they taken on? How have they fared? What happens if something happens in the project? Is it a regional center that stands by the project and goes after and enforces the terms and conditions of their loan? Or is it a regional center that just walks away from a bad project? You need to know these things, because it may not just be the first project that you're looking at. You're going to want to know how it was structured. You're going to want to have trust and faith in the regional center, because the likelihood is, if you're from countries that have visa backlog issues or things of that nature, you may end up in a situation where your funds have to be redeployed. And so you want to know that you're working with a regional center who's capable, who has the staff, who has the experience and the expertise to find and underwrite new deals that work for redeployment. And so, redeployment is not a benefit to CMB. I think it has become a benefit to certain other regional centers who, especially the regional centers that are also developers. They look at it as a means to be able to keep reusing that money over and over and over. And, from a profitability standpoint, CMB doesn't necessarily need the redeployment money for, projects that get repaid early and things of that nature. We'd just assume return that capital to our EB-5 investors and move on to the next deal. That's what makes our investors happy. Their goal is green card, get them their money back. And if we have happy investors, we have investors that want to talk about CMB to friends and colleagues, and that just helps us moving forward in the future. Tying up their money in redeployment, overall, we think is bad for the investors. And, frankly, we wish that, the program were structured a little bit differently to create some flexibility there. And we'll just have to wait and see what happens in the future. But for the time being, we'll stick to our current strategy, which has, I think, been a benefit. We have many investors, and I should note, we have many investors who have received 829s after having had their funds redeployed. The loans got repaid early, or they were backlogged in a visa category or whatever it might have been, or in a country with a visa backlog, and funds came back. We had to redeploy their money. They now have 829s and they now have their money back. That's happened in multiple occasions, multiple partnerships with CMB. And so we have a long history of being able to do that and still see that our clients receive approvals in return of their capital.
Yep. So we are getting close to an hour and a half. So thank you all for all of your questions. We're going to answer one final question. And it is, has construction been delayed? Or if so, would that affect the partnership or would it affect job creation?
Yeah, and so I think we touched on this a little bit earlier. We originally released this project, back in May, I believe. And at that point in time, there's some early site development ongoing for the project. Some of that work slowed a little bit. And then, the developer started working with the tenant in more, detail, worked on that, as I mentioned, that cost reimbursement agreement. And it's been off to the races. And frankly, the timeline that we have associated with the project, I think they're gonna stick to that timeline. I don't think that we're gonna see some sort of major deviation, whether it be weather or COVID. Of course, we have to wait and see how those things play out. But for the most part, I think that this is a project that's relatively simple and straightforward. It's a developer that's done 158 million square feet of this type of development work, and a tenant who is in high demand for this type of space and expanding their footprint nationwide. So I think that the likelihood this stays on track and gets completed in sometime late Q3 of 2021, I think is a high likelihood. And remember, it's a 6-year loan. If we see some sort of short-term delay, a few months, it's not likely something that's going to make or break the project. It's got a long-term tenant in place, and so the demand for this product is still going to be there. I don't think that you're going to see a situation in which 2 or 3 months of delay for whatever reason, weather or COVID, is necessarily going to break this project. I think, and I should talk very briefly because we're getting to the end of our segment here, but this type of construction is really simple too. It's called tilt-up concrete construction. It's not like building an intricate hotel or an office building with, an artistic element and a lot of, masonry or glasswork and that's very detailed and things like that. It's a really pretty simple, straightforward project. They're going to build a concrete pad. They're going to pour molds for the walls. They pour concrete for those walls. There's interior steel, as you can see in those projects, for the main support and structure and the roofing elements. And then they tilt those concrete panels up and into place. They interlock them and they weather, seal, and tighten the building. And then they have certain interior build out once the building is weather tight that they complete. But, again, it's a relatively simple process, and a developer that's done millions of square feet of this type of development throughout the country, throughout the world, for that matter.
Yep. And then just to touch on, to add on to Matt's explanation, when it comes to job creation, it's not going to affect it. Because remember, the way we, of course, create jobs here at CMB Regional Centers is through the capital expenditure of the project. So when the funds are spent, the jobs are created. So in the event there would be a short-term delay, which we don't foresee, as long as the construction finishes and makes it to completion, all the jobs will have been created. As you can see from the different collaterals we have, we also have completion guarantees in place to ensure that the project is going to make it to that final completion stage. So when it comes to job creation for all of our investors within the partnership, there is that comfort knowing that the project's going to make it to completion, and knowing that this, top Fortune 500 e-commerce company has already signed a lease. So they are in need of this facility. So I think there's that assurance there that is going to help make sure that all the jobs are created for this project. So, but yeah, so I think that brings us to the end of the webinar today. I hope everyone got value out of it. If you have any further questions, I know most of you on the call are probably already working with someone from our team in the investor relations department. But if you are not, like I said, we will follow up with an email to all the participants and anyone that registered for the event with a link to the video. And we will also provide, of course, that contact information for you to reach out if you would like any more information. So once again, thank you for taking time out of your day to participate and attend this webinar today. And thank you. So Matt, I don't know if you have any closing remarks.
Yeah, the last thing I would say is that, I think we can't leave this webinar without stating some obvious facts here. The next 36 hours are going to be important for EB5. The House and the Senate are working on a budget that will extend the federal budget, but potentially also the EB5 program. There's been talks about, a long-term reauthorization, and, no one's 100% certain as to what that will look like. Certainly it's tight timeline. The next 36 hours to file before we know one way or another is pretty tough. But we're confident that this program is still going to be around. So I'd encourage everyone to really dig into the due diligence. You never know. Is it going to be around for another couple of months or another year, or are we going to get a long-term reauthorization? So either way, I'd be prepared. I think Group 75 is a fantastic offering. I think it gives people an opportunity to invest into something that has been an industry sector that has thrived during COVID and hasn't been impacted in the same way that we've seen other assets, such like hotels and things of that nature. So, let us know if you have any questions. We look forward to working with you throughout the way. Good luck on your EB5 journey, and we'll be here to help.
All right. Thank you all.